Hello traders, Mark P. Markets here. My name is Mark Principato and I'm a chartered market technician, and thank you for watching another exclusive video analysis here for FX Empire. So in this session, I'm going to talk about the NSXUSD, which is the Nasdaq 100 CFD. And the question that I want to answer is this the time to be buying stocks? Okay, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, when we gauge risk in the broader markets, especially when it comes to timing stocks, we look at two things. We look at price location and we look at relative strength, which is not to be confused with RSI. Now, in terms of location, this market is just at dramatic new highs, okay? And there's just nothing in this thing's way. We had a bearish pin bar yesterday, which had no effect on this market today, and it closed strong. But the question again is, should we be buying stocks up here? And the answer is no, because the higher this thing goes, the greater the risk of retrace. Now keep in mind, I'm not calling for a bear market. I am not calling for a trend reversal. But what I am saying is there's a good or a better chance or a greater potential that this thing produces a healthy retrace over the next few weeks. Now, how can we tell, right? The chart's not telling us anything. There's nothing bearish on this chart. So like I said, location is one thing. This is how much higher can this thing go at this rate? So the potential is limited, right, on the bullish side. But the other factor, like I said, that we talked about is relative strength. That means we compare it to another market, okay? And the market that we compare to here is the S&P. So let me pull up my S&P chart here. And as you can see, this is the S&P futures. And the Nasdaq, relatively speaking, is way above this peak from March, right? Way above that March peak, while the S&P is not. This thing hasn't even taken out this high here of 3230 area, okay? Now, that is a sign of relative weakness. So day to day, they may be moving together, but on this bigger picture, there is a red flag. Now, if this thing starts taking out these previous lows here, these daily lows, like 31 and a quarter, or basically 3100, starts taking that out, that will produce a sell signal, and that is a likely sign that a broader retrace is in play. Now the next question is, where can this broader retrace take us? Well, let's go back to our Nasdaq chart here, and let's look at the inflection points. The first inflection point on this thing, we're looking at 10,300, 10,250. That's the first inflection point, which is a ways from where we are right now. All right, that's a good amount, about 300 points, 400 points away, something like that. That's a normal, healthy retrace. If price clears that area, then you're looking at this 97.50 support, which was the old resistance back in March. And if it takes that out, then we're looking at this 91.50 key support level. This is the structural support that defines this entire bullish structure. As long as price stays above that 91.50, we can still consider this thing in a bullish trend. Now, keep in mind, I'm not anticipating such a pullback in a couple of days. That whole process can take days to weeks to play out. But the key point that I'm trying to make here is, without a retrace, the risk is just very high as this thing pushes higher and higher. And if you're buying stocks like this feeling safe, then you're actually going against the probability, okay? The buying opportunity will be when it reaches one of those inflection points. And just give it some time, you're likely to see one of them. All right, so like I said, that first one at 10,300, if we can get a reversal there, that can be a much better opportunity to step into some stocks rather than buying at the peak. Okay, so I just want to leave you with that. If you have any questions, please feel free to reach out. My name is Mark Principato. Thank you for watching.